Boy, oh boy, it just feels like us PayPal investors can't catch a break. It felt like we were finally out of the doldrums coming out of that earnings report. The stock was actually moving higher, and then today, just out of the blue, the stock's down 2.4%. And there's a lot of people out there that are kind of questioning their investment in PayPal again today, because it seems like this stock is just never going to go up and it's never going to catch a bid, even though it is undervalued. So, this might be a normal thing, if the stock market was down today for PayPal to be down 2% or more. But the fact of the matter is today, the NASDAQ is actually having one of its best days of the year, up more than 2%. And PayPal itself is down basically 2.5%. So the question is, how much would PayPal be down if the NASDAQ itself was down? I mean, we're probably talking down 4, maybe 5% on PayPal stock if the NASDAQ itself was down and not up 2%. Just absolutely crazy. Now, there is a reason for this, and I actually think the reason is pretty comical. It's because an analyst from Phillips Securities, like they're important. I'm not trying to be rash, but who's ever heard of Phillips Securities? Cut their rating on PayPal down from what they say. They downgraded PayPal to accumulate from a buy rating. If you ask me the difference between accumulating and a buy rating, I don't know the difference, but obviously there's a difference. And they decreased their price target to $75 down from $83. Trouble. Now, there's a couple reasons why I think this is comical. Ever since that earnings report that came out, there have been countless analysts out there that actually increased their rating on PayPal stock. And yeah, it resulted in the stock price going up a little bit. But then just some random analyst from Phillips Securities chooses to downgrade the stock, and the stock responds by going down 2.5% and basically taking back all of its gains that it saw following the earnings report. I mean, that's just crazy to me, and it's a great representation of the overall sentiment when it comes to PayPal stock. There are still so many bears. Even the bulls out there seem to be weak-handed. Anybody that tells them, or anything that shows them that they might be wrong about their thesis with PayPal just results in them choosing to sell the stock. Just like that. Even despite countless analysts upgrading the stock, more weight is given to the single analyst from Phillips Securities that chooses to downgrade the stock down to a price target of $75, which is still $10 above the current share price. This is just a very confusing time to be a retail investor, and it really is going to test your patience. As a retail investor, by definition, it's a very long and a lonely road, and it's a very noisy, lonely road, which is kind of counterintuitive, but this is what I mean. It's a long and lonely road because by definition, you're saying that Wall Street and everybody else in the markets are valuing a stock incorrectly. That's what you're doing when you're making an investment in the stock market. You're saying that everybody else is valuing this asset wrong, and I'm going to take advantage of it. I'm going to buy it, and I'm going to bet that they're going to change their minds at some point in the future. By definition, it's a lonely road. But the noise comes from the bears. People telling you, you're wrong. Look what PayPal stock has done since 2021. Since 2021, the stock is down 78%. And you're saying it's just going to change overnight? And people will call you dumb, stupid, whatever it is. It's a noisy yet lonely road. And this is why retail investors largely fail at investing. They'd be better off buying market indices because it takes an immense amount of patience and an immense amount of confidence in your research and in your due diligence into these companies. And that's actually the second reason why I think the stock price reaction to the downgrade is so comical and so silly. It's because investors are giving weight to what Wall Street and other analysts are saying about the company they own. And by definition, you already are disagreeing with them. If an analyst decides to downgrade your stock, it just makes that dichotomy even more extreme where, okay, well, I disagreed with you before, but I disagree with you even more now. But instead, people choose to hit the sell button because, this guy from Phillips Securities must know better than me. I mean, I just can't stop looking at this. Again, it's not like this analyst downgraded PayPal to a sell. He downgraded it from a buy to accumulate, which in my book, in my investing definitions lexicon, it means the same thing. Accumulate and buy mean the same thing. And his price target is still $10 above the current trading price of the stock. I mean, if anything, this is just entirely representative, as I've already stated, of the current sentiment around PayPal stock. And this is actually, if you've been following along with my YouTube channel, this is actually when I like to buy stocks. When nobody else agrees with me, when most other people are telling me I'm dumb or stupid to make an investment, that's when I want to buy. That's when I want to buy undervalued companies that are high quality. Right now, the fact of the matter is PayPal is valued for 0% growth. Well, let's talk about these earnings. What did they come in and do? But really quickly, if you're new here or turning and not yet subscribed, please subscribe down below. We have one of the fastest growing stock market YouTube channels on this platform, and it's thanks to you guys that watch my videos every single day. We have an amazing community, and I'm eternally blessed, and I'm eternally grateful for it. But without further ado, let's get back into this video. Well, the revenues for the first quarter increased 9%. to $7.7 billion. 9% is a heck of a lot better than 0%. And most people, most bulls on PayPal stock were actually only forecasting like 7% revenue growth in Q1. They came in with 9% revenue growth in Q1. And this is something that I have been confident in forever, since the last earnings report. I believed that this management team was sandbagging their guidance numbers an incredible amount to reset expectations on Wall Street and from investors about their company. And sure, it could hurt over the short term that they're sandbagging their numbers, but once the markets start to catch on that, all right, PayPal, we know you're just sandbagging. We know you're going to come in and beat by 2 or 3%. That's when resetting expectations will actually play out and benefit shareholders. But again, it's going to take patience, and a lot of people don't have the patience and the wherewithal to sit through this sort of stuff. But yeah, the good news goes on. Their Q1 earnings per share increased 18% to 83 cents per share, which is phenomenal. Their total payment volume increased 14% to $404 billion. 14% increase in total payment volume going through PayPal. And people are convinced that this is a dead or dying company. Well, let's keep going. Payment transactions increased 11%. Payment transactions per active account increased 13%. So PayPal's existing users are starting to use the platform even more. Tell me again how this is a dying company and how everybody's moving away from PayPal because there's no purpose for it. And then something that a lot of investors missed, I think, is this line here. On a sequential basis, active accounts increased 0.4% or by 2 million accounts. That is a huge deal because remember, these are quarter one results. So this is January, February, and March that PayPal is reporting on. Usually, you actually see a decrease in PayPal's active accounts coming out of the holiday season of Q4. People go online, they spend a lot of money for the holiday season, and a lot of those transactions go through PayPal. And then once Q1 turns the corner, or once Q1 comes around, a lot of those people fall back off the platform. So the fact that they actually grew active accounts in Q1 this year is a huge deal that I don't think people are paying enough attention to. And then next, their cash flow generation from operations was $1.9 billion, and their free cash flow was $1.8 billion. You want to know something funny? After the company's previous earnings report, they were guiding for free cash flow in 2024 of $5 billion. $5 billion, and they did $1.8 billion in Q1. So chances are, if they stay on this trajectory, instead of having a free cash flow of $5 billion like they've projected, they're going to come in with more like 7, 8, dare I even say $9 billion of free cash flow. And again, if that happens, eventually the markets are going to wake up. Oh crap, we got PayPal wrong. They're growing like crazy. Their free cash flows are amazing. I have to buy this. I have to buy this now. That's what's going to happen. This is, previously I've said that I thought the rise in PayPal stock could be a slow one, but I actually think the initial rise now is going to be pretty quick because there's going to be that moment at some point in time in the near future, sometime over the next 2 or 3 quarters, I think, that investors all of a sudden realize, ooh, we got PayPal wrong. We need to buy now. Now, if you want to talk about their balance sheet and liquidity, as of the end of Q1, their cash and cash equivalents and investments totaled $17.7 billion, and their total debt was only $11 billion. So their liquidity ratios, or their ability to pay off their debt, look very good. They're very healthy right now. Another thing that I think investors are not really considering right now, that this company is not in financial trouble. And that's another note I wanted to make was, if you guys don't realize this, ever since the pandemic, the great virus crisis, our economy and the global economy, it's not just our economy, has been going through a goods recession. People have been spending way less money on goods and they've been spending more money on services. Well, eventually this goods recession is going to turn into a goods recovery. You know what's going to happen? PayPal's revenues, their free cash flows, their profitability, their margins, all of them are going to skyrocket. PayPal has performed admirably in an arguably unfavorable environment for their company. When the global economy turns around and the goods recession turns into a goods recovery, this could get really freaking exciting. Now, on this note of free cash flow, they did $1.8 billion. We've already covered that, and that's amazing. Even myself, I think I'm one of the bigger PayPal bulls out there. I didn't forecast them coming in with $1.8 billion of free cash flow. But what a lot of people were disappointed in, and it's surprising to me, was the fact that they only repurchased $1.5 billion worth of shares. A lot of PayPal bulls and investors wanted them to buy back $2 billion or more of shares. And I get it. You know, that's one thing that a company can do to really help out its share price performance. And right now, the stock is too cheap. But I think bulls are getting a little too ahead of themselves when they say they should repurchase even more shares than $1.5 billion worth during the quarter. This is because if you have a company that spends too much money on share buybacks, Wall Street will actually punish that company, because that convinces Wall Street, right or wrong, that the company doesn't believe it has good growth levers it can pull. It doesn't believe that the growth of the company is going to continue. It becomes convinced that this is a stagnant company, it's done growing, and as a result, the best place for this company's cash is returning cash to shareholders. As a PayPal investor, I don't think that's something we want. I don't think we want Wall Street valuing this company like it doesn't have growth in front of itself. We actually want Wall Street to respect this company. So if they chose to repurchase more than the free cash flow of the company in shares back during the most recent quarter, I actually don't think that would be well received by the markets. They've previously guided for share repurchases to be at least $5 billion in 2024. I do think that number's too low. I think they're going to come in with much more than $5 billion of share buybacks, just because I think their free cash flow is going to be so much bigger than their guided $5 billion. I mean, again, they did $1.8 billion already in the first quarter of the year. Just as a result of that, I think share buybacks are going to exceed $5 billion by quite a bit. We could be talking $6 billion, maybe even close to $7 billion in share repurchases, which is a lot. That is one of the largest share repurchase programs in the entire market when you consider the overall market cap of this company. In fact, I want to look at this. PayPal's current market cap is let's just call it $69 billion. Well, let's say I'm right and they choose to repurchase $7 billion worth of shares this year. Well, that's repurchasing 10% of their company in 2024, which is, that could be a really good thing, but that is a lot. That is a massive share repurchase program. And again, I don't think the markets would get much out of an increased share buyback, just personally. And the fact of the matter is, when you do your valuations and when Wall Street does their valuations for these companies, they already consider the fact that PayPal is going to repurchase these shares, and that these shares are going to come off the markets when they come up with their price target. Another way to put that is share repurchase programs most of the time are priced in way before they even happen, because everybody knows they're going to happen. So they price that in to their valuation of the company. So I think even another aspect that I'll just cover quickly, because it's not that profound, but it's something I think investors are forgetting or losing sight of, is that this management team has already started to turn the company around. And this management team is, all of them, they're new on the block. They're new to the company. It's very rare you have a company the size of PayPal, the scale of PayPal, completely wipe clean their C-suite team and hire new people. But that's exactly what PayPal's board of directors chose to do. And most of the people here in the executive leadership room that you can see on this screen here are new to PayPal, or they've been promoted from within, and the old have been fired and let go. This is a completely new slate for the company, completely new management, and they've already turned around this company. So, if other investors can't have the patience to really see this through, it actually benefits me because I want PayPal to become my largest stock that I own if I can accomplish that. So the lower it stays for the longer amount of time, the better it is for me, in my personal opinion. And I think a lot of investors, that's kind of a mindset shift you have to eventually take on as an individual investor. You actually want these stocks to fall short term so that you can buy more and you can own more of the company for cheaper. But yeah, I just wanted to note how remarkable this turnaround has already been for this executive leadership team. Most of these people haven't been in their roles for more than 4 or 5 months. In fact, the CEO himself was hired just at the end of September last year, and everybody else here was hired after him. So this again is just crazy. And I'm here for it. I'm going to stick around and keep buying PayPal stock whenever I see opportunity. And right now, I see opportunity. So on the screen here, you'll see how analyst estimations for this company have changed from what they were prior to this earnings call to what they are now after this earnings call. You can see that analysts as a whole have increased their revenue estimations for the company, but they've actually decreased quite significantly their earnings per share estimations for the company. Instead of seeing $5.13 of EPS this year, which was their old estimation, they now only see 4.49 cents of earnings per share this year for the company. And I just have to say, I think Wall Street is incredibly wrong. I think they're incredibly wrong about this company's earnings, and I think they're incredibly wrong about this company's sales and revenues also. And why is that a big deal? Well, it's because when you look at PayPal stock, I'll go to the Yahoo Finance screen here really quick. You can see on the statistics page what their current forward PE ratio is. Their current forward PE ratio is 15.5. Very, very low for a company like PayPal that is still growing at a double-digit clip. 15.5 as a forward PE ratio. But you know what? If analysts are wrong about their earnings projections for the company, this forward PE ratio is actually even lower. We're talking 12 or 13 in some cases. On the screen now is my fair value spreadsheet for PayPal. This tells you if PayPal was fairly valued based on my inputs, what the stock price would be. This is a spreadsheet that I've made available to all my paid monthly members. It means a lot to me, those of you that support me monthly, because I am entirely self-funded, because I don't accept sponsorships. I don't do that sort of thing, and it's because I value my independence, and I think you guys value that too. So it means a lot to me. Those of you that choose to support me monthly, if you're interested in that and getting access to a bunch of perks, you can check out those perks and the tiers by hitting the join button located right next to the subscribe button, or hitting my Patreon link in the pinned comment. Without further ado, let's look at this. For 2024, I have PayPal doing $33 billion of revenue, which would be 10.74% growth year over year. Really, really strong revenue growth. And I've also inputted all of my estimations for their expenses, whether it be transaction expense, transaction and credit losses, the list goes on, sales and marketing, tech and development, yada, yada, yada. And I come up with that they'll have an operating income of $5.9 billion this year in 2024, and that their net income will be $4.7 billion, which would give me earnings per share of $4.91. Again, this compares to the updated analyst projections of $4.49 of earnings per share. So I'm quite above what they're at, and I think I will be more accurate than them just based on the way Wall Street is valuing this company. I don't think it's correct at all, and I don't think they've really caught on to the fact that PayPal is sandbagging their numbers from here on out, but that's besides the point. We can talk about that in another video. But I also have numbers for 2025 and 2026. These are numbers that I will constantly be updating just based on the results that come in and based on the macro environment, really, the macro economy. I'll be updating these numbers. But as of now, for 2025, for the company expanding their revenue growth to 11.36%. And then in 2026, I have them expanding their revenue growth to basically 13%. And if my estimations and my inputs hold true, I have the company reaching earnings per share of $8.77, which is kind of crazy. I mean, that's close to a double up of earnings per share in just 2 short years. And That's because right now the company's able to buy back so many shares. I've actually done this calculation. That's what this random number here is. It takes the $5 billion that the company anticipates pouring into share buybacks, and I divide that by the current share price to see how many shares outstanding the company could theoretically buy back if they fully deploy the $5 billion at today's current share price. They could buy back over 76 million shares tomorrow if they wanted to. Now, they're not going to do that, but it's just a fun calculation to see the size of this buyback. As of now, though, I only have the company repurchasing 5% of their outstanding shares this year, 4% next year, and then 3.5% in 2026. I actually think those figures are low. So this is actually more of a conservative price target spreadsheet, just based on my understanding of the company. But I don't want to get too carried away with bullishness. I don't want to get too carried away with this share buyback, because the fact of the matter is, I don't think the company needs the share buyback to have good stock price performance. And I think a lot of bulls think that's what has to happen. I don't think so. But anyways, based on these inputs and a forward PE of 25, which historically for the company, PayPal's traded at a 30 or 35 because of how well run and how just the global scale of PayPal. It's traded at a 30 or 35. So even the 25 figure for my forward PE multiple is conservative. But using that, I have the fair value for PayPal today, this year in 2024, based on this year's numbers, sitting at $117.75. In 2025, I have it sitting at $163.54, and in 2026, I have it sitting at $219.25. Again, this is conservative, but over the next 2 years, based on my conservative inputs, or what I view as conservative, I think I could see well over 200% return on my investment in PayPal. If I'm patient, and if I'm right about the market all of a sudden realizing that they have valued PayPal incorrectly, which I think inevitably will happen. I mean, it's a rare opportunity out there in the markets. It only comes around once in a blue moon, as people say. But I actually want to know what you guys are thinking with PayPal stock. I know PayPal's a bigger retail investor stock than most other companies out there. It's kind of interesting, but I think it's because a lot of people think it's going to perform similar to the way Meta performed when they were massively undervalued, and it's possible. But I'm curious what your updated thoughts on PayPal are, because I see a lot of bearishness out there. I see a lot of people losing faith, losing patience. And if that's one of you, I'd like to hear your thoughts, because I'm not saying I'm right about anything I've stated in today's video. It's just my opinion, and my opinion doesn't have to be correct. Your opinion could be more correct than mine. I'm just here to share with you my thoughts and opinions. You might think I'm a clown, which is okay, but thanks for listening to me. Thanks for watching this whole video. If you're new here, return tonight and subscribe. Please subscribe down below. We have one of the fastest growing stock market YouTube channels out there. I'm extremely grateful for that, and I'm extremely blessed, and I can't believe I get to wake up and do this every single day. It's what I love doing, and it's thanks to you guys that follow my channel and support me monthly and watch my videos. So thank you guys so much. I hope you have a great rest of your day. Stay blessed. Keep 10 toes to the ground and your chin up. Peace out.